Oh, there we go. Hey, good morning, everyone. Turn that one off. Hey, good morning. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well, wherever you are. Got a few of the early birds on. Hey, Kevin, good to see you, mate. Back in the house. Brendan's here. We got David. We got Facebook user, whoever you are. Hello. You're behind the screen in one of the groups, I think. Morning, Luke. Fiona. Hey, Fiona. How are we, gang? Folks? Good to see you. Hey, good to see you. We've got Deb there. And, Graham, Alison. Everyone's in the house. Hey, good morning. Good to see all of you online. Adrian. Fabulous to see you up early. Hey, Sasha. You're catching it live, which is good. Hey, supposedly, the housing downturn is over, folks. Interesting times. Might just quickly do the intro. Hey, I do it every day, Wealth Coffee Chats, but Jason Witt's my name. If you didn't already know, I think most of you do, but if you're new, you're dropping by, you're new, you found us either part of our mentoring coaching program or you found us accidentally, welcome. Wealth Coffee Chat, Jason Witten. Here, coming to you live each day, 8:10, etc., etc. But today, I thought we would talk about something that, we talked about ages ago, actually, didn't we? We all did some analysis on information, data, taking a look at the markets, and really understood what may happen a while ago when we were talking about the property market, didn't we? This is nothing unusual. This is nothing new. For intelligent, informed, knowledgeable property investors, this is what we were expecting, right? Weren't we? Weren't we expecting this, right? Let's have a look at what we were expecting in recent times. So we had certainly a conversation around this for a while ago, team. 2019. We are now in 2023, and we had something happen like this. Okay, 2020, 2021, 2022, and this is capital growth. Had some significant growth, bit of a slowdown, and now we've got things kicking off. A little bit of an adjustment. A little bit of an adjustment in our capital growth in here. And what were people calling it? What were uninformed, dramatic, media carry-on malarkey? They were calling it a bust. They were calling it a cliff. They were calling it whatever. They were calling it all sorts of names. But you and me, we get together each morning and we go, all right, well, let's have a look at the data. Let's have a look at the info. Let's have a look at our long-term investment plan. And the trend is quite handy. It's quite useful. And all of us are pretty happy with the trend, the look, the direction. and the fundamentals which are going on, right? Okay, let's have a bit of a look at this. Let's analyze. Is the housing downturn over? It's a bit of a call. House price downturn, Sydney and Melbourne, according to major property analysts. You know, you've got people out there in the marketplace, RP Data, SQM Research, a bunch of them. So let's go and have a look, team. Where would we look? Where's a couple of places that you and I like to look? And I'll tell you, you guys should know one of these data places that we like to look. What is a leading measure in the world of property investing and interest rates? We're sort of talking about, what are we going to look at? There's two things. Property prices going up. Number two, rents, going up. And interest rates going sort of up or down, okay? How do we get ahead of this? Where do we go? How do we do the research, team, when it comes to the most, up-to-date, in-time information we can make decisions on? I don't know. Am I asking that question? Well, what websites, what data, what two places do I like? Do I try and teach you guys to like when we're thinking about these things? Asking price. Yeah. Where do we find that information? Boom, Luke's on it. It's kind of giving it away, isn't it, really? So let's go and have a look. Let's go and see. All right, the media's got an article out. Hey, the price downturn is over. All right, is it? Is it over? Really? All right, well, let's go and have a look. Let's have a think about where we would check out that reality. And let's do this. Let's go and have a look at SQM Research. Luke is on that there before. I've used this a heap of times. It's one that I like. Hang on. No, not that one. Go and make this one over here a little larger. There we go. So check this out as we go. If we have a look at the rolling asking prices, team. So this is the weekly asking price. So if we are in the world of data and statistics, the closest to the future we can get when it comes to, information about property prices is what is the price that these houses, these apartments, this is sort of 3-bed and whatever, 2-bed units, apartments, whatever. Luke was on last night, and you can drill down into SQM Research into down to suburb level, which is brilliant. I love this website. It aggregates a lot of information when it comes to taking a look at things, right? So the weekly asking price. So it has, it had flattened out. It had sort of gone to a bit of a high here, and now went down, turned, and the average weekly asking price. Now, how does that transmit, team? How long does it take from a weekly asking price? Just chuck it in the chat for me. Probably a rough guess. How long would it take to go, right, this is the weekly asking price of properties for sale? How long does that usually take to translate into something when it comes to reality, when it comes to sales data? How long? Like a week, a month, et cetera, et cetera. What do you guys think? Chuck that in the chat for me, because this is part of us. Depends on the time frames. It usually takes between 3 to 6 months, Luke, and maybe a little bit faster these days as we go along. So let's have a look at, and we can go, right, the capital city asking rent. We can check on this. Yeah, it does depend on days on the market too, David, as well. That depends on flowing through. There's a few things, but check out this, right? Check out the trajectory of weekly asking rents, and in it slowly but surely, like literally every week, it's going up a few dollars, right? So if it goes up, if it's going up like $2 a week, then you're looking at $100 a year. It's crazy time. So this is really good data as property investors, we're looking into the future and we're going, what's the trend? What's the look on our rents? What's the trend? What's the look on our capital growth? And I like this one. It's a no frills bit of data that we can go and have a look at. So let's go and have a look at some data when it comes to the actual capital cities. Let's have a look at Sydney. And Sydney's kicked off again, on the up and up. Check that out. The weekly asking price of houses. Wow, that's so good. Anyway, there's the combined. Apartments sort of, getting a little run on as well. And you can go check that out. All right. So let's check somewhere out. Maybe Adelaide. Let's check that out. It hasn't kicked back off again, but I'm sure Adelaide will, depending on how we go. So that's overall data. Well, where else can we look? Do you think, okay, what else is going to hold back there's two major things that are going to hold back the property market in the short term. What's the major one that holds back or unleashes the property market where we are right now? Tell me in the chat. What's the one thing that we've all been, acutely watching, and something that paused just only weeks and weeks ago when it comes to the property market? Team, tell me which one. Yeah, sentiment. Yeah, but it's connected to what, David? What's it connected to? How do people feel? Like, what's a big cost right now on a lot of people when it comes to the world of property and property investing, velocity of money, or the access to money, right? And more accurately is the rates, the interest rates, right, team? And what do the interest rates look like? And when we look at, what do we think that might happen in the future when it comes to interest rates? Well, interest rates are on a pause right now. And, the common feedback right now, the aggregated feedback across the market is that the rates are on a pause. Interest rates are on a pause. And that pause will probably be around for a month or two until they find out what's going on with inflation. If inflation goes down again, then we should be okay. If inflation goes up again, then they might put the interest rate up another 0.25. So that's what we're looking at. And we're going, okay, well, let's go and aggregate the opinion of the 10-year government bond. Now, I'll get Andy Fenton and some smarter people to come on and talk to us about that one day. But really, what correlates is the future value. The 10-year government bond has a correlation, an aggregated opinion of what might happen with interest rates and also the direction of the interest rates. So check it out, team. So most professionals, thousands of them out there, are aggregating that the interest rates are going to stabilize and or come down. They're future buying it at a different price than now. So what does that mean? It's very technical. Don't get too lost in the technical stuff. It looks like we've got a downward trajectory of the interest rates into the future. We've got an upward trajectory of asking prices and asking rents. Okay, that's looking good. So prices and rents going up, interest rates going down. That creates an opportunity for borrowing. And then what else is going to exacerbate this issue or growth and things into the future? Well, you guys know that we've got a severe issue when it comes to construction and providing this stock to the marketplace, right? Now we're up to, I think, about, I'll get the latest number, 27 of our largest home builders in Australia have gone broke, collapsed, or restructured. And, many of the states have got shortfall significantly when it comes to how many houses are required for the population. Right? So let's go have a look at this. Let's go have a look at has the market turned, and has the housing adjustment or the downturn stopped? Well, it looks that way. It looks that way. So where are we? I mean, you guys know this. We've talked about it a bit, right? Interest rates on pause, and they will look to go down in 2024, right? The cost of money will get cheaper. Our supply is down, and it's a disaster. It's not going to change. Our population is up significantly, close to 1 million people in a very short period of time, and it will continue to go up over the next 5 years pretty significantly. Pretty significantly. And our rents are up and yields are good. Yields are good. Okay. Yields, big tick in the box. So for us all, team, we're looking in a pretty good spot, really, at the end of the day. Has the downturn finished? Most likely. Most likely. And even if it hasn't, even if it has another little spurt because the RBA, puts the interest rate up another 0.25 because inflation, chips along, well, we know what is going on. Right now is a great time to get that next property deal if you haven't already. Been talking about that for a while because most people living in fear and ignorance are running away. They're not at the cutting edge of this data and information team, okay? As we all should be. If you're a property investor, you want to be on the front foot. You want to be right there when things are happening and understand how long they might take to happen and so on. There's no crystal ball, that is for sure. But certainly for all of us, if we understand where to go with the right data at the right time, we can make sure we get some good information to make some great decisions. Anyway, there you go. Has the downturn finished, team? Well, most likely. Most likely. To be honest, it finished actually about 6 months ago. I was calling that when the actual rent boom started. It was actually probably 12 months ago, 12 to 9 months ago, because the problem is most people only associate the property cycle with capital growth, and that's not true at all. The property cycle has many different facets, and one of those cycles, which is an early indicator and a lead marking for value when it comes to real estate, is the rental yields. The rental yields. There you go. Something to keep an eye on. Anyway, that's it. Wealth Coffee Chat done and dusted. Hopefully that made sense, team. Hopefully that made sense. Join me tomorrow for another one. If you're up, out and about, let's do another Wealth Coffee Chat around 8:10 tomorrow morning, where we can drill into any info. As always, if you got anything that's yeah, you did right, Brendan. Yeah, when the taxi drivers start to give property investment advice, then we're surely on the turn. All right, team. Well, that's it. Done and dusted. Join me tomorrow for another one. If you've got any subjects, thoughts, or ideas that you want me to cover, make sure you put them in the chat. I always read the chat afterwards. And yeah, if there's anything there, happy to have a bit of a yarn on that one. All right, team. That's it. Join me tomorrow. Until then, you guys take care. Remember, this thing's a marathon, not a sprint. So buy well, don't sell. That's what I say. You guys take care. Bye for now. Wrong one. Bye.